Going to start recording. All right, let's rock. So for those that are joining us today, welcome. Glad you can make it. Apologies for the off time, but when we get a speaker like Nico, we adapt to his busy schedule, right? We've got a great privilege today to have Nico Ahn from Allianz joining us to talk about some of the work that he's doing in the insurance sector. And Nico was a former student of mine from quite a while ago at Concordia and has gone on to, not surprisingly, great things. And we're looking forward to hearing what he has to say about the current work he's doing and how he got to where he's going. Nico, the people that we have on the podcast, the live viewers and typically people that watch it are current students, former students, and then also general kind of people in my network for DE. The students specifically on the current courses that I'm teaching at Royal Roads University are taking a graduate course in environmental management tools. So like ISO stuff and LCA and these kind of things, like the EIA course basically, except condensed. And then we've also got a group that's working on environmental accounting and reporting. So, economic evaluation, environmental profit and loss account, that kind of stuff. And then we've also got undergraduate students from a 300 level course in sustainable development, which are more kind of like a broad survey course on the idea of sustainable development. So we got like a mixed group of people that are looking at different aspects of the problem. But I think what you're working on kind of like touches on all of those, the focus of study. So I'm looking forward to having a chat with you. It's great that you made the time to join us, and let's go. So tell us a bit about you, your background, what you're currently doing, and how kind of like you ended up where you are.
So first off, thank you for the kind introduction, and happy to be with you and the group and the students, and looking forward to spend the next hour with you guys on sustainability topics. So my name's Nico. I've been working in sustainability my entire career so far, essentially. I started basically in my bachelor at McGill in Montreal, where I did a Bachelor of Arts and Science in Environment and Economics, which then led me to do a master's degree in environmental assessment at Concordia. And as part of that program, we had to do certain mandatory internships. And one of them first led me into the environmental regulation area at Bombardier Aerospace, really looking at how environmental law impacts design of aircraft, features on basically the intersection of engineering, sustainability, and law, which was a quite interesting experience there. And I was very lucky because I got a second internship opportunity and was able to do 2 internships as part of the program, where actually one was only mandatory, and then was working for Allianz Climate Solutions, which was a subsidiary of Allianz Group, sitting here in Munich, really looking at how insurance and climate change go together, and how ESG, so environmental, social governance risks, are impacting insurance and investment companies. So I've been with Allianz since 2015, essentially starting off here as an intern and going through various roles. And for most of you, probably Allianz is not necessarily a company that you know about much, because in Canada, we're not that prominent on the normal retail insurance market. But Allianz is one of the world's largest financial service companies, focusing on insurance, investment, and asset management. And actually, many of the projects that you would be seeing in Canada, like mines, like a large part of Air Canada's fleet, would be actually insured by Allianz in the background. So we're quite big in Canada on that industrial insurance segment, where people like you and me, we wouldn't necessarily see that to a large degree. And many of you might actually be customers if you have insurance through your credit card, because many Canadian banks actually have the insurance that comes with your credit card is in the background actually underwritten by Allianz. What have I done here so far? So during the internship, my main role here was to look at processes and rules of how environmental issues, social issues, and governance issues are considered when we're insuring large-scale projects. So let's say there's a mine somewhere in Latin America that's being insured, before we provide an offer, Allianz does a due diligence on certain environmental risks. Is there issues with downstream impacts from that mine? What are the social risks? Are there issues with security personnel or relocation of people? If there are indigenous communities, have they been informed, involved in the planning process, and so on? And all of this information is put together to take a decision on, do we as an insurer want to actually become involved in this? Do we want to provide an offer? Or do we want to decline the transaction because some of the issues haven't been dealt with properly? Or, and that's the third option, which I feel is the most powerful, is that we accept something with certain mitigation measures or additional conditions that we give our client that they should fulfill if we become their insurer. Where we have the biggest real world impact. Because if we as an insurer just decline it, some other insurance company that maybe doesn't have strong sustainability processes will just insure it. So with accepting something with mitigation measures is where we have a more powerful lever in the end.
And how do you stack up in terms of your competitors? You know, like for instance, in the banking world, like just pure finance, never mind insurance. If you want to look at international finance, which I'm sure you're very familiar with, when you have like international mines or whatever that are going to be backed by the World Bank or the whatever it is, African Development Bank, as opposed to say just some commercial bank out of Asia. I mean, the project will get financed, right? Most likely. It just depends on how willing the group that's seeking the financing is to be open to some of the conditions that, say, the World Bank or whomever has. So in your industry, are there those kind of like bottom of the barrel? I won't say, I mean, it's kind of crude, but there are groups out there that say, yeah, we'll insure you and we don't care about any kind of consultation and all that kind of stuff. Do you have to deal with that? Because I mean, I'm assuming that's a competitive factor that your company has to think about and when you're walking into these situations.
So I would say amongst European peers and more also in North America and in parts of Asia, this sustainability risk mindedness is increasing, and awareness and processes are increasing just because the external pressures are so high. Because something that's from an insurance or investment perspective or a financing perspective, if you're talking about banking, if it's something has a lot of sustainability risks are just a precursor to financial risks. So it just makes business sense to actually screen your risks according to sustainability amongst all the other factors. Of course, if you're financing something, creditworthiness, liquidity risks, you look at risk from a holistic perspective, and sustainability for us at Allianz has been embedded within all standard risk management processes. So instead of building extra sustainability processes back in the day, it was decided to actually use established risk management practice and integrate sustainability as an additional dimension to that, instead of having a parallel organization within the company.
And how has that worked out in terms of as an evolution of your risk assessment processes? It seems logical to me, like that's probably how I would do it if I were in your guys' position.
So if we use NGOs as a measure and NGO criticism as a measure, I think back in 2012, before I started, when the first members of my team were established to create this, it was called ESG office at the time. We were big in criticism for insuring things. The Belo Monte Dam in Brazil, Allianz was involved in the initial insurance. And the processes just weren't there. And over the time, we worked with different trusted NGOs, had regular exchanges to build our guidelines and our rules. We established 12 sensitive business areas ranging from agriculture to mining to hydroelectric power, nuclear power, but also things like animal testing or clinical trials. And for each of these sensitive areas, we have a guideline that our frontline workers will have to fill in, checklist essentially, to identify certain high sustainability risks. And if they identify something, it gets escalated to my old team where I used to be. And they then this is a team of ESG experts that is then capable with the background knowledge, with coming from more of a science-based background, to be able to assess these risks and come to a binding conclusion. So we're not recommending, we actually, in my old team, we have a veto right. So we can say no to transactions.
Okay.
So an example would be one of our entities in Southeast Asia wanted to insure a hydro dam in a river that was being constructed. And it was in a region where there is almost no renewable energy. So you have that as a pro for this project, but the due diligence identified that a specific species of river dolphin only lives in this habitat.
Oh,
and
wow.
building a dam would lead to the extinction of this species of dolphin. So we then had to basically have the climate transition opportunity and the biodiversity risk. And these are then the difficult decisions to make. And we had decided to decline providing an offer on this because we simply don't want Allianz to be linked to the extinction of a species. I mean, their sustainability risk is also often a reputation and sustainability risk do go hand in hand in many cases. And it's something you don't want a Western newspaper then saying Allianz insures dam that kills river dolphin.
Yeah, I don't think there's a worse example of like a dolphin, you know, like that's like the poster species for it. There's no one that doesn't like dolphins, right? Like
exactly. The only thing worse would be killing pandas.
Yeah, exactly.
WWF all over.
No go.
So that was basically my first role, and then over the years I was involved in various process updates, making it more efficient. Yeah. And then I moved over into the reporting area. And I was responsible for the global sustainability report of Allianz for 3 reporting cycles.
Right.
And we then transitioned that into the finance area. So since a year and a half now, our finance department is responsible for preparing the sustainability disclosures of Allianz.
Right.
It's a trend we see, especially in Europe. I don't know to what degree this is also happening.
I'm looking for my phone to charge it.
Oh, sorry, we've got that one. There we go. Go ahead. Sorry about that.
So we were seeing many of our peers and other companies in Europe also on that trend that sustainability reporting is being moved out of the sustainability functions into the finance areas and our accounting and reporting team, because we want to have data quality increase, use the same processes that we use for financial data collection across our organization, also for environmental and social data collection. And so that was an interesting 3-year experience, quite intense, quite seasonal. And then you always think you have the summers that are a bit calmer before the next reporting cycle starts, but then you have all these improvement projects over the summer. But it doesn't get boring, especially in an environment where regulation on sustainability reporting is now ramping up quite fast.
But was that done at your end of fiscal? You had to like produce your it was in alignment with your year-end reports, I assume, right?
Yeah. And the project, we usually started around September with the actual report production and alignment with all the internal stakeholders.
Yeah.
We had an agency in London supporting us on design and copywriting, and PwC acting as the auditor, because we had the full report audited, not just certain KPIs, but we wanted the entire texts and numbers in the report to receive limited assurance, which is the first level of an audit review that we get. And then the report was more or less stable by the end of March, early April, and we published at the end of April. So there was about a 2-month gap between the financial report and the sustainability report.
Okay.
And as of next year, we're planning to close that gap. So we're pulling sustainability really to also, because it is as important as financials to us. So we want to show our investors and other stakeholders that we can deliver, and we want to show the numbers and the sustainability numbers at the same time.
So are you doing separate reports, so still like a sustainability report and a financial report, or are you putting them together?
So there was discussions on integrating our reporting, and we have a sustainability section in the annual report due to European legal requirements. And there was discussions on full integrated reporting. However, with the European Corporate Sustainability Reporting Directive, which enters into force for reports as of 2024, separate reporting will be mandatory.
Interesting. Okay.
So we kind of put on hold for now the projects and plans for integrated reporting, as regulation will be asking for separate reports, at least in the medium term. But who knows? Regulation also changes and trends change. So we're monitoring that. And Europe especially is now looking to establish its own set of mandatory requirements for reporting, which are leaning on GRI, the Global Reporting Initiative standards, but also implementing some other topics. And then we see the big trend at the international scale with the International Sustainability Standards Board, which is basically like the IFRS Foundation, which has created international financial reporting standards. We now also have an international body that's trying to establish sustainability standards across the world.
I've started to see some examples, and this is in fact just for the 560 course, which is the environmental accounting. When I was looking for examples of environmental profit and loss account companies that have done an EPL, more and more I'm seeing integrated reports. So it is like a fully integrated report where it's sustainability and financial put in one actual document. And I hadn't seen that up until, a year or two ago. So I don't know, these are, I believe, if I'm not mistaken, those are North American companies that are doing that. I don't know if they're European or not. So I'm curious to see how that evolves, whether it's just a current trend and then it may separate again or whatever.
Yeah, I think it's extremely dynamic right now. And because there's so many actors and players, and Asia, for example, is monitoring and watching what Europe is doing. The SEC is discussing to make climate disclosures mandatory for listed entities in the US. So there's a lot of things happening right now in parallel. And sometimes not in alignment. We'll have to figure out how to comply with multiple things that aren't always well adjusted to each other.
Right.
So these are the challenges of someone that is going into the reporting field right now, and definitely something where, in Europe especially, within the next 5 years, medium-sized enterprises, even non-listed medium-sized enterprises, will have to start producing sustainability reports.
By legislation, they'll be regulated.
By legislation. They will be regulated to produce reports.
Wow.
And that will cause, so if you speak French or German or any language that's spoken Italian, there will be a lot of sustainability reporting jobs in Europe, and a lot of sustainability audit jobs with the big four in Europe.
So they're gonna, I guess, PwC, KPMG, and whomever else, the Deloitte,
EY, and
they're gonna be like all over that, like all over that space. Great. So just to rewind a bit, like I remember in our work at Concordia, you were interested in this space, like in terms of like analysis and reporting, and it seemed, I remember our discussions. Is there anything that kind of drew you to what you're doing now? Like, there's a lot of different directions someone could go in this space. You could be working more in strategy or even on whatever more research oriented stuff if you wanted to be. What drew you to this kind of like this type of work? Was it kind of the effects that one can have by engaging this? What really are the motivating factors?
So I think sustainability, or my first step was, of course, going from university into the business context. I could have also at that point gone to government or NGO work and so on. And I always felt like sustainability will only work if the private sector also acts on it. So I want to work there because the private sector has a big lever to bring things forward. And the first part was this ESG risk topic, which was just very close to EIA and was fun to do and a good first step in the door. And then after a few years of doing that, I got the opportunity, and I was asked if I want to take over the project leadership for sustainability reporting. So for me, it was something I was always involved in my setting as one of the ESG risk responsibles, providing chapters and content to the report, being involved with reporting.
Mhm.
And then my manager at the time, I mean, when I took it over, I think I was 27. She said, this is a huge project and it's a huge opportunity for you. I think you can do this and you should take this over. So it was really more of a taking over a lot of responsibility in the fourth year of my job, essentially.
Right, right.
I talked with a lot of people if I should take, like, what should I do? Should I take it over? And it was the right step because I learned a lot. In the end, this was project management experience with about 90 stakeholders internally and externally, really keeping all the wheels going, because you have the data streams of the numbers that go into the report. You have the content with all the texts that go in and all these different aspects, and you have to make sure you keep very clear deadlines. And I really try to touch base with the stakeholders that are delivering input throughout the process to see where are things not working well, how can we adjust things, try things out. If it fails, do it differently the next time. And it was fun. And when we then handed it over to accounting for 1 year, I was basically training the people there and onboarding them into the process. And it's actually great to see what they're doing with it now, because it was me, another colleague supporting me, and an intern working on the 100-page sustainability report. It's now a team of about 10 people working on this.
Okay.
So, and they're still all working a lot on this. So there's just so much more energy that goes into it. And it's great to see. And I then had the chance to take over a new project, which I guess we'll get into in a second as well,
Right.
which is, it freed me up after I had handed over the report to the accounting guys. I was ready for my next step again after 3 years of this.
But so just to kind of conclude on that, so you've handed off the reporting responsibilities for the sustainability report to your accounting team. Now they've brought in people with background in this area, I presume, on that team. Like, it's not just a bunch of CPAs trying to do a sustainability report now, is it?
It's a mix. So they have people with the finance background, because we want to use the established processes. So we needed people that are experts in that. Plus we have people that come with more of a sustainability reporting background.
Right.
That some of them came from other companies, some 1 or 2 fresh from uni. So it was a good mix of people that you have the finance and reporting experts, and you have the sustainability experts. And I think it's a good mix and a good strategy to bring it together. And even thinking back to my days at university, one thing that always bugged me to a certain degree is how much we work in silos often in universities. And why don't we connect more between the business school and the more science people and the engineers, and have more courses that are multidisciplinary, interdisciplinary, because the problems we're solving in the world aren't just solved by one discipline. And it's the same when you get to the corporate context. You need to have people with different backgrounds to get to these kinds of solutions. And work on projects, especially regarding sustainability, because
100%.
if you do sustainability in a silo, you're going to be doing just things like corporate citizenship, volunteering, these kinds of things. But to truly integrate sustainability, you need to collaborate across your organization and even outside, and partner with others in your sector and across, not just within and outside your sector.
And just to hear your account of how you went about doing the work you've been doing in the reporting and just in general stakeholder consultation to make sure when you guys are taking on a new project to assess the risk exposure, like talking to NGOs, for instance. I mean, talking to an NGO as a private sector player, if you will, requires a certain type of finesse. And I mean, in general, and sometimes a lot of finesse, depending on the NGO you're dealing with, right? So those skills and that kind of like understanding of other people's disciplinary background, their orientation, their motives, and all that kind of stuff. I mean, you got to get that. You have to practice that by working with diverse teams, and through different groups. I think there's one lecture I I gave you guys about mapping different stakeholder. I don't know if you remember that one, but that's one of my favorite lectures to give in that program, because I talk about like NGOs, unions, all these different groups who have like dramatically different perspectives on the problem and different priorities. And you're like, in your position, you have to like get those people on board. And another thing, like when we look at critiquing at CSR reports, because one of the groups is doing that right now, it's like, it's easy to critique one of these reports when you look at it, but to understand the amount of work that goes into getting all those numbers accurately, good data, putting it all together, getting the designers to make it look good, getting it copyright, all that kind of stuff. It's a huge job, like massive. So anyway, couple questions. We'll take questions as they come in too. We had a question from Michelle about, so the kind of clients you would work with, a range, I guess. You're dealing with big infrastructure projects, corporate clients. I mean, you mentioned Air Canada as a client of yours. You're all across the board, right?
So we're across the board. That we have, of course, the large corp segment, mid corp SME business, and retail business on the insurance side. So, for example, in Germany, we're the biggest car insurer. We're active in over 72 countries with operations. And of course, we have our environmental impact, or our sustainability impact is has multiple aspects. Of course, as an organization, through the buildings, heating, cooling in other parts of the world, we have a certain ecological footprint, but that's very small if you compare us to a manufacturing company, mining, steel producer, and so on.
Right.
Big impact as a financial services company is through the money that we move, through the insurance that we offer. And we're basically an enabler for the real economy to take action and to enable the transition. So especially on climate, which is one of the pillars of our sustainability strategy, is climate action. And there we've been looking at decarbonizing our investment portfolios. So as an insurer, on one hand, you're covering people's risk and they pay you the premium. On the other end of insurance, for example, especially due to life insurance, but also property insurance and so on, we have to do something with the money that the clients pay to us. And that's why we have a portfolio of about 800 billion euros that we're investing across the world in all sorts of companies, in all sorts of infrastructure, across the board. And here we really take sustainability as one of the aspects into consideration in the decision-making of how the money is invested. And climate, since the Paris Climate Agreement has become one of the key aspects that we're focusing on, we started by excluding coal from our investments. Now we're in the process of rolling out the coal exclusions on insurance, so no longer insuring coal mines and coal-based power plants. Earlier this year, we put in place a oil and gas policy, really looking at what's the roadmap for oil and gas, with the goal that we've set ourselves to have a net zero portfolio emissions from our investment and insurance portfolio by 2050.
Okay.
And for some sectors, this will mean exclusions if the company is not on a pathway that is in line with science to reach net zero. For other sectors, this will mean growth opportunities, hydrogen or other things where we see more chances in the future. And it's really about how do we shift our investment and insurance portfolio in line with these science-based paths. And a key part, especially before we do exclusions, because if you sell your shares, someone else will just buy them. It's that we try to engage the companies that we're invested in and see what's your plans to address your emissions. What's your pathway? Do you have transition plans away from producing oil? Does your company basically still have a future if the assumption is a 1.5 degree world needs to happen, which for us it's one of the key pillars. So the climate strategy is really about how do we shift the money onto these pathways. And there we work through two main organizations. One is the UN convened Net Zero Asset Owner Alliance,
Mhm.
It's an organization that was called into life by the Secretary General of the UN, bringing together investors, pension funds like for example, the Caisse de dépôt et
Mhm.
placement du Québec, the French pension fund,
Mhm.
big insurers like AXA, Allianz, and Swiss Re, Munich Re. They've all joined to move their money in line with the science-based paths.
Mhm.
And then last year at COP26 in the UK, the Net Zero Insurance Alliance was also called into life to do the same that the investors are doing for insurers.
Mhm.
And there's also, we're not a bank, but there's also a Net Zero Banking Alliance and doing the same for in the banking sector. So
Okay.
this is kind of the financial sector using its position as a financial service provider to influence and impact the real economy and move forward the transition.
So we had a question. I'm just sorry to interrupt, but Elsa kind of speaks to what you're saying. So Elsa was in the environmental management tools course. How do you tackle insuring companies for which you also own a stake? So for instance, Heidelberg Cement is one. I don't know if this is an actual company that you're both insuring and taking ownership in. I assume it's following the logic that you've just explained. You know, you have certain screening criteria for both the insurance as well as whether you invest in someone or not.
Yeah, so it's essentially the first step would be engagement. So talking with the company, understanding their climate strategies, asking them, what are your plans? How do you intend to be in line with science on getting to a 1.5 degree world? So these are the kinds of things we do there. If the company doesn't act or is going in the wrong direction, then we do take decisions to take companies off our list of eligible investees.
Okay.
And then we divest our shares.
Okay.
The same we would do with human rights. We have we engage companies that are red flagged by data providers as having human rights issues. We have conversations with them.
Yeah.
If, of course, things don't change overnight, but we monitor this over a couple of years. And if they don't improve their action on certain things, then we would blacklist them. The same if a company doesn't answer our requests for engagement, then that would be a more immediate decision to divest from them. So this is kind of the approach we take. We talk first with the company, understand, and then we act so that this process isn't a toothless tiger in the end.
Right. Okay. Take one more question here, and then I want to get to what you're working on, the climate change adaptation work, which is sounds super awesome. Elsa, again, please elaborate on future IFRS requirements internationally versus companies that operate and design environmental standards to the minimal requirements for that country versus required standards for human and environmental health. Does Allianz have a plan for now or moving forward? Example, German environmental standards are more stringent than Canadian. Do you ensure the German parent, if their subsidiary is only meeting the minimal requirements? Same example as you would look in kind of projects in, say, Ghana, Mali, or countries like this, where there's perhaps not well-established environmental regulations. How do you deal with these kind of different levels, I guess?
So I think there was the first part of the question was more on reporting requirements. So there, our plan would currently be that we report according to the European required standard and meet the international standards. So that would probably mean a more expansive sustainability reporting going forward to meet all the requirements. On screening our projects, we have our set of standards that are derived from World Bank, OECD guidelines, and a variety of other international guidelines, plus our own views and learnings, having had this process in place since 2012. So I would say that our standards for that we would put into our risk management processes go beyond national standards, and we're more stringent, because in the end, the scrutiny will come from customers, NGOs, and stakeholders across the world. So we have to make sure that we are in line with expectations of our core markets, especially being active.
This new project that you've got starting now, I guess, how long have you been involved with this? This is, from what I understand, you're working on you'll explain, but it's insurance solutions or financial solutions for climate adaptation in relatively vulnerable states, such as African countries and so forth. And I believe you're partnering with UNDP or collaborating with UNDP and other organizations in this. Can you want to tell us a bit about this new project you're on? Sounds cool.
Yes. So of course, what we talked about before was all about climate mitigation and seeing how we can get to 1.5 degrees. But what we need to remember is that we're already at 1.1 to 1.2 degrees of warming. And 2050 is still a long time to go for those remaining 0.4 to 0.3 degrees of average warming. And with 1.1 degrees, we're already seeing climate risks, physical climate risks increasing around the world. And specifically for that reason, the G7 at the 7 years ago, when Germany was hosting the G7 the last time, an initiative was called into life to see how investment and financial services, mainly insurance, can be a component of adaptation for developing countries.
Okay.
And the G7 then called into life the Insure Resilience Global Partnership, which brings together academia, private sector, UN level, NGOs, and various other stakeholders to this at the high level. The UN Insure Resilience Global Partnership is a think tank bringing ahead ideas, principles, standards. To really make this something that is implementable and has a real world impact, the German government then set up the Insure Resilience Solutions Fund to finance the actual piloting and development of such solutions.
Okay.
Allianz last year, before I became involved with this part, when I was still in reporting, applied for a grant from the German government together with Swiss Re, our local subsidiary in Ghana, and several other partners to develop a flood insurance for Accra, in the capital of Ghana.
Okay.
Because Ghana is, especially Accra, it's on the coast, especially during their 2 rainy seasons, there's a very high risk of severe flooding within the urban environment, which impacts the poor and vulnerable parts of the population proportionally higher. So we received a conditional approval in January, and we're working on all the legal aspects to be able to receive the grant. And now on July 1st, formally kicked off the project and are now in the active phase. And what we're trying to develop essentially is a so-called index-based insurance product.
Okay.
So a classical insurance product, when something bad happens, there's an insurance adjuster, a claims adjuster, he takes a look, what's damaged, and estimates how much money the client should get, and then the insurance company pays out. Index-based insurance product, we're using some sort of sensor data, be it water gauges, satellite data, weather, rain station data, and so on, that we can use to develop an index of how much water is in the street, or how much rain has fallen, because certain water heights in a flooding event correlate to a certain level of damage.
Right.
And you can have a payout that happens a lot faster than having to send someone there who assesses the damage and so on.
Okay, interesting.
You can do the same with drought, assessing fields based on satellite data, or hail damage, for example. And we're now testing a new form of satellite data from a Finnish-American satellite data provider that hasn't been used in an insurance context like this before. It's SAR satellite data that will measure the height of the water. So they need baseline imagery, and then they can compare it to what is happening during a flood event to assess how much water has been in the street. And we then design an insurance product. Once a certain threshold has been hit, the payout starts, and then you're on a range up to a certain maximum payout level.
Okay.
And for our product, the insurance client would be the Ministry of Finance of Ghana. Okay. Not individual households. Just for the sake of administration, this is a lot easier that way. And the idea is not to reconstruct individual people's homes, but to reestablish the public infrastructure, because especially the poor and vulnerable depend most on the availability of roads to access markets, on the availability of electricity, water, sewage. So it's reestablishing public infrastructure as fast as possible through the insurance payout.
I see.
Why would a government want an insurance product for that? Currently, if they have a flood, they need to take money from other parts of their government budget to pay for the disaster response, the immediate relief and the reconstruction, or wait for donor countries and so on. If there's an insurance product, they're basically paying into it, and in the event of a disaster, they will get a fast payout to be able to finance the response and reconstruction efforts. A key risk here is that if the economic situation in the country is not well, or the government isn't willing to pay, then of course that's a risk in the end that the product is not successful in the end. But especially with Western countries now more recognizing their responsibility for historical emissions and thus the physical risks, there's more considerations, especially the German government, the government of Canada as well, of co-financing insurance premiums for developing countries, which is also more plannable for governments here. If you have a fixed amount you're paying for insurance premiums for developing countries, it's different than having to always organize a conference where you discuss flood relief for XY country. It becomes more plannable in the end. And that's why UNDP is in this project. So I'm working with the guys at Swiss Re, the natural catastrophe experts at Swiss Re and Allianz Reinsurance, who are doing really the modeling, assessing the data. Can the data really do what we expect it to do? The big risk here is that within the 2 years of the project, it's a bit difficult because we don't wish a flood on anyone. But if there's no flood during the next 2 years, we have no data to go on for the development of the product. We would then need to see if we can use if we find cities or places around the world that have a similar profile and try to test if the solution would work there, if the satellite data captures that imagery. So we need to see how that goes. And that's one of the biggest risks in the project that we need to overcome.
Is it GIZ? So GIZ is the group that's financing this?
No, it comes from the ministry above GIZ. So the German Federal Ministry of Economic Development.
Okay. So, and in terms of the satellite data, so I guess this is nice to hear that you're using
remote sensing.
Well, so you know what an index is.
It was my prof for remote sensing.
No, but so that satellite data, that's a private company that's providing the data, right?
Yeah.
And do they have like good coverage? What's the spatial resolution of the data?
I think below 1 meter. So they are satellites that they can task to a specific mission.
Right.
So that's why we're using weather data from the Ghanaian Weather Office. We see the risk of a flood occurring. They can basically task the satellite to the specific mission for us to be able to capture that data
as it's occurring.
And we're working with a social media data provider that can assess floods based on Twitter and YouTube posts to confirm the satellite data. So we can then have the satellite, we have the weather data, the satellite data, and social media data, bring it together to see if it actually, so we're confirming from multiple sources if the flood has occurred.
Okay, very cool. So you're almost like it's real-time insurance flood response to incidents, and that's the advantage, which without the administrative barrier of responding, deciding how much money should be allocated. You have that predetermined based on your risk model, and then the idea of then having this kind of built into some sort of aid packages through overseas development assistance, I think that's a great addition as well. So I guess you would be presenting this to Global Affairs Canada and the German government, maybe Norway, whomever else, the other donor countries as well.
So there's basically at the part of the G7 communique from the German leaders summit a few weeks ago, the whole topic of creating a global shield for climate adaptation
Yeah.
and resilience was
Yeah.
part of the statement, and the G7 are endorsing this and want to bring forward a plan at COP in Egypt later this year.
Wow.
To really see where to bring something out that can really promote the further development of these solutions. Because we have to be honest, my product that we are developing is very small scale. It's just Accra,
Right.
just Ghana.
Yeah.
It has the opportunity and potential to be scalable. So if we see that this works in this region,
yeah,
and the satellite data is available,
yeah,
we could expand this to a whole country or a whole continent, and look at how we can solve these kinds of issues. And we're just one of these projects. Swiss Re, our partners, are involved in several other projects in Mexico, in Latin America. There's projects that are being started also in Asia, in the Caribbean. So the whole, through the Insure Resilience Solutions Fund, various of these projects are being funded and rolled out to provide these kinds of insurance solutions. There's work going on risk modeling and mapping solutions within the industry. And here again, it's important, what I said earlier, this collaborative aspect to work across the industry on this project. Swiss Re is one of our competitors.
Exactly. That's why I'm surprised to hear that you're close, like you're working hand in hand with them when really you're competitors in certain markets.
Exactly. And this is why for climate change, both mitigation and adaptation, we need to overcome some of these competitive boundaries and work together to find solutions. Of course, all within the limits of what's allowed under antitrust law, which is an important aspect to consider. But I think getting solutions to the market, really a way how we can have a real world impact on climate adaptation and sustainable development.
We got a question here, Nico, from Michelle. Can you speak with respect to what's happening in the youth climate movement? You know, obviously this has been something that's becoming more prominent. You've seen the climate marches. The one in Montreal a few years ago was one of the biggest things I've ever seen in Canada. Do you see that youth, particularly, it seems, is the question, holding big corporations such as your company and others more responsible for tangible action on climate change? Is this something that you're seeing?
So we ourselves have not necessarily been in the key focus of, for example, the Fridays for Future movement in Germany. But some of the things that the debates they are kicking off, we welcome these debates and we welcome the engagement. Our CEO, I think the last World Economic Forum before the pandemic, our CEO was on a panel with Greta Thunberg, and they discussed climate change with various other world leaders on that stage. And I think we welcome the youth movement on climate, because it's for us, taking climate action is key and it's essential. The other part with legal action, we're also looking at how, especially in the liability insurance space, how is climate liability actually becoming a topic? So we've seen, I think, the farmer from Latin America that has gone to take Shell to court in the Netherlands. He basically had to build a retaining wall to protect his farm from a glacial lake that was basically swelling up because the glacier was melting. And he wanted to recover the cost portion that Shell is responsible for the emissions for building this retaining wall that's protecting his farm.
Vancouver's doing the same thing, Nico. Vancouver, they've recently, sorry to interrupt again, but there's a movement for a part of the budget allocation of the City Council of Vancouver to take the oil and gas industry to court to reclaim costs of rebuilding the seawall around Stanley Park, right?
And that is essentially the next thing for insurers is this things that we have covered without knowing it in the past, which could become a huge cost, and how do we deal with this in future contracts?
Right.
Something to exclude? Is that something that companies have to pay an extra premium for?
Yeah.
So this litigation risk
Mm,
is something where we as an insurer have to watch out quite carefully, and as an investor have to keep our eyes often open. Is litigation maybe also something we have to do if our asset values of the companies we invest in are impacted by polluting industries? So something we're monitoring quite closely.
mm. And in terms of your work, so in general, I mean, you're crossing a lot of boundaries here in terms of who you're working with and who you're collaborating with, both within your organization and outside of your organization. What challenges or opportunities are you seeing in the work when you're bridging economic or financial costing with respect to these environmental indices and so forth? Is this an area that's still like, is it problematic, or what have you seen so far in this area?
I think within my organization, there's really been a shift over the last few years. And the big milestone was, I think, 3 years ago, that we established board of management targets for sustainability aspects. So certain sustainability aspects pay into, it's a small part, but they pay into the bonuses of our board.
Okay.
And I think since then, a lot more initiatives have been started, a lot more management attention, because of course these board members cascade these targets down to their senior executives, and it goes throughout the entire organization. We've now become extremely structured at alongside all the financial targets that are set to our local entities around the world. There's now environmental and social targets that are also pushed down into the organization. So there's a lot of action taking place. People are now, as these targets become even more quantitative and less qualitative, people are now noticing, oh, we will actually need to invest to get new customer segments. We will need to invest in new products. That there's now a thinking that people are seeing the opportunities and are starting to become willing to invest more into it. On the outside, I think we're not fighting as much for our topic anymore. We're going from more of a pushing sustainability out into the organization to the organization pulling on us. And it's really, whereas we were, I think 3 years ago, we were a department of about 12 to 14 people. We're now 24. Wow. And all the other core functions. So there's now an accounting sustainability team doing the sustainability report with several people working on it, at least part-time and full-time. There's a risk sustainability team. So within other functions, we now have siblings. We're on top, basically steering the entire organization. And then the experts within the specific functions are looking at how to put it into that organization, that part of the organization. Plus, with our 72 subsidiaries across the world, each subsidiary is supposed to have a board member responsible for sustainability integration and a senior working level person. So I will actually in September and October be working from Singapore to help build up sustainability in the Asia Pacific region. Wow. With our team there. And we'll be on assignment.
Excellent.
From Singapore.
So back, just to dig into that a bit more. Now, in terms of like, you're working in an insurance company, which like say 15, 20 years ago, to suggest that someone who is seeking to work in insurance have any knowledge whatsoever of environmental management and environmental management tools would have been kind of something someone would look at you funny. They'd say, well, what are you talking about? This doesn't make, why would I go dig a ditch and sample some water or something like that's what you're going to be trained for, right? Whereas what you're saying now, to me, indicates that you're drawing on a lot of these different kind of concrete skills. Even like, I'm surprised, so like the remote sensing stuff is like, you just pull that out of your back pocket and say, oh, don't worry about it. I know about indices. And you're suggesting as well with these upcoming regulations for medium-sized enterprises that are going to be required to produce sustainability reports, it appears that environmental management tools as kind of a body of knowledge is increasingly valuable or useful within your space. Is that the case?
I would agree, yes.
Yeah.
So especially as I think, sure, reporting shouldn't be I mean, reporting is the output in the end.
Yeah.
To be able to report, you need to have done something. And of course, you can report we're not doing anything, but that will hurt you in the market as consumers and your B2B partners are becoming more and more conscious. And just an example, even though we're just, we are providing health insurance to a big German car manufacturer, and we received their sustainability questionnaire that they would also send to their other suppliers. So, and it goes down. So every supplier, everyone who supplies either consumers who are in the end more and more becoming sustainability minded and focused, or if you're supplying a B2B partner, they will also be asking for this. The government will make you report on it. So you better have a strategy in place to reduce your environmental impact, to make sure you're treating your employees, customers well, and to have a sustainability strategy in place.
I see. Okay.
For that, you need those tools. For that, you need whatever. I mean, an environmental management system makes sense for maybe manufacturer. We are certified ISO 14001 in several of our locations. We don't have it as a global organization everywhere, but certain parts of Allianz, certain sites are certified. In Germany, you have certain energy management systems that are mandatory, so ISO 50001. In Europe is one of the ways of complying with certain laws. So these kinds of tools are becoming more and more important, and understanding what it means, and also understanding what it doesn't mean, because I think a lot of people they only know on the side, oh, there's environmental management tools like ISO 14001, it's the magic bullet that solves everything. But knowing the caveats of the environmental management system is only as good as the targets and processes you put in place. You can have a certified system, but it really doesn't achieve anything, and it gets a stamp because you've complied with the standard. So this is one thing as a sustainability professional, you know what an ISO system can do, what it can't do, and what others and other stakeholders might expect a lot more of it, and then might be disappointed when they actually see the outputs.
Well, having critical knowledge of these things, and this is one of the things we look at in the EMT course, environmental management tools course, is to is an environmental management system enough? And clearly it's not. I mean, especially ISO 14001, respect to the standard, it's a decent standard, but it doesn't establish absolute targets. Like ISO 14001, that's great that companies have it, but unless you look at the report and see some tangible absolute targets or progress on intensity-based targets, however they frame it, the meat that goes into the system, then I don't know. That's
exactly.
Michelle, who would have thought insurance was so interesting? Well, no, I've been saying it for a while. First time I had, when I was doing my master's at McGill, we had a guy from Swiss Re come in and talk about their climate work in 2005. And I was blown away. I mean, Swiss Re deserves a lot of credit. They've been at this for quite a while, right? One of the earlier ones, I would say.
And as a reinsurer, they're of course more exposed to the accumulation risk of climate risk.
Absolutely.
But also for everyone who wants to read up more on insurance and climate risk, the Swiss Re Institute publishes some great papers on climate risk, on these kinds of things. It's the Swiss Re Sigma series.
Sigma. I'll note that. I'll share a link with everybody. Any other questions? Does anybody have any questions? I don't want to just have Nico and I dominate the discussion. Let's hear from whoever's online. Just do you have any questions for about this sector?
Hey, it's Elsa. Of course, I'm going to hop in here.
Go for it.
Turn on my camera. Say, I sit in just outside of Calgary, Alberta, and it's probably a bit of an insurance nightmare. 2013, there was a large flood here in Calgary area, and 100-year flood, whatever. Lots of damage. The Calgary and province is putting mitigation measures in on the rivers. It's a confluence of two rivers. Calgary sits in there. The Saddle Dome, that's an arena. And it was designed and planned to be upgraded and rebuilt. Calgary has reissued their flood zoning maps, and the Saddle Dome sits smack in the middle of the red zone, which means from a development perspective that you cannot actually build new construction. You can update existing homes, etc. So here lies the fact, and the rub is that the city, using half of public dollars, and then the Calgary Flames Hockey Club, would split the costs of which are now estimated over $700 million to rebuild the arena in the same spot. So just wondering how that affects, how does a company such as yours even start to deal with an insurance element of that using public dollars in a flood zone that is zoned for no construction for massive new thing?
Good question. Nico, what do you think? What would you do? You're called into this situation.
So in the end, this is more of a public policy issue. I would say that I guess insuring this would probably be a relatively high premium, not knowing more about the details of the geography and so on. But we, for example, do have various mapping systems where we can put any point on the map around the world to assess the flood risk, fire risk, and so on, from forest fires, earthquake risks, and so on, landslide risks. It's a tool from our reinsurance NatCat, natural catastrophe team, GIS based. And I guess this kind of situation would call for an additional premium where you have a facility that is in a high risk area, even up to an exclusion where we would not offer insurance for this kind of solution. In the end, flood maps, zoning, it's, I don't know if it was big in the media in Canada. I think we had some major flooding last summer in Germany and other parts of Central Europe. And now there's also considerations of how should flood maps be redrawn? Should people who lost everything be allowed to reconstruct where they lost their homes? And that's always a difficult discussion. And I think the public side is not using insurance or the know-how and capabilities we have from insurance enough. Maybe we need to offer this as a service to a certain degree, to consult the public hand on how to, on when they make these zoning and flood map decisions, because we as insurers and reinsurers have expertise, historical data, and know-how. To my knowledge, this is not happening systematically yet, but maybe that is something where insurance, because the best insurance, or before you get to insurance, you should have good risk management, and this is where our know-how can help planners, developers on managing risks from an insurance point of view.
Well, and if I may jump in, Elsa and Nico as well, I mean, this idea of climate resilient infrastructure has been a buzzword that has been growing in terms of its popularity in the international financial institutions, such as the Inter-American Development Bank, Caribbean Development Bank, World Bank, and I'm sure, Nico, you've heard all kinds of talk about this stuff. And Elsa, what your comment there is, there's a public policy element to that decision, clearly, because it's public money that's proposed to be used, similar how public money would be used for, a highway in Dominica or something like that. And I would agree with Nico's point in that those that are responsible for making those decisions, which is it's a public decision, I would argue that it is incumbent upon them to make the most wise use of public funds and de-risk that investment from an infrastructure standpoint, and to call upon expertise of those that really have the tools to support that decision making would be something that I would stand behind as well. I'd say, look, have you talked to anybody that knows about this stuff before you go and commit whatever it is for the Saddle Dome, or name another infrastructure project in Canada or elsewhere? So I don't know, that would be something I think definitely we should see that is more. I know for sure that is how the multilateral development banks are thinking about this stuff. They want to de-risk those investments and those loans that they make. They're on the hook for some of these loans as well, right? So I don't want to take too much of your time, Nico, because I know it's getting late there and I'm sure you got a busy day tomorrow. So I wanted to ask you, what do you see? I know your immediate future is lined up for you. You got this really cool project in Ghana and Accra. You've got some neat stuff coming up in Singapore, but in general, what are you excited about? Like, what do you see as the future role of the insurance sector in addressing these major significant environmental challenges that are coming up? This mission to keep things within 1.5. I mean, there's only so much any one in the industry or organization can do, but what do you see as aspirational possibilities for your sector, for you and within your organization to kind of, break through and make some of these leaps that need to be made?
I think on the sector side, we're very focused on climate right now, but there's other ecological boundaries that we need to watch out for. And I think the debates on biodiversity risk are increasing.
Yes.
Water risks, in all senses, are increasing. Circular economy. So we've focused a lot of energy on one topic, and it will be important to see action happening on other ecological issues, while keeping in mind a societal minimum, and keeping in mind that, sure, we need to limit ourselves on the ecological scale, but make sure we do it in a way that is compatible with livelihoods, with societies, and not, I mean, we could shut down all electricity production that is carbon based, but it would make electricity unaffordable for the largest part of the population around the world, which is also not so. So it's the E and the S of ESG that need to be in a right balance, and I think there's a lot of work that still needs to be done, and that motivates me also, that this doesn't get boring. I mean, there's more to be done. Climate is one thing, climate adaptation and mitigate. Even there, we're strong on mitigation. We're getting started on adaptation, but we should already be thinking about the next crises that will hit us. And the other thing is that a large company like Allianz, you just have you have much more leverage over others. When the Secretary General calls upon you to help create an alliance of investors that want to reduce emissions to net zero, you know that when the Secretary General has you on his agenda, that it's something, you're in a company that is having an impact, and that will continue to have an impact. And we've been around for 130 years, so let's hope climate change, other E or S crises don't stop that, and we continue to build livelihoods.
Yeah, well said. Perfect answer. Great. Well, I think we should start to wrap it up. I'm actually in Seattle right now for meetings, and I gotta check out. So.
Okay.
But Nico, thanks a lot. I really appreciate it. It was great to connect with you again. I've got lunch for you whenever we're in the same kind of location, if I'm in Europe. And hopefully it's in Munich, and we'll get some schnitzel, because that's my favorite food.
Yes.
But I appreciate the time. Thank you for everybody to coming out. This is really a fascinating discussion. You're doing awesome work. I'm super glad that you've kind of followed this path and committed to it, much like others. Like, it's nice to see guys like you and David, who like committed to the ideas that we talked about, 10, 12 years ago, and actually are seeing the return on investment. It's not like, I mean, you're doing good work, but you're also making a good living and doing work. Work to you, like me, is not work. It's like, it's
exactly
fun.
It needs to be fun. Yeah.
So keep up the good work. Really appreciate the time, and thank you for sharing us the knowledge with us, and thanks for everybody to coming out live. This will be on YouTube in the next day or two, so feel free to share within your networks. I think a lot of people should benefit from listening to our discussion, because you've talked about stuff, Nico, that a lot of people don't know the insurance sector is as active on as they should. And it's good to know that the money folks and the insurance folks and the risk folks are like actually doing really leading level, front level work in this area. So thanks a lot.
Thank you everyone.
Okay, take care. Until the next time. Bye-bye.